After a week characterized by a massive bounce of the Nasdaq, the ARK funds, and the S&P 500, and as investors continue to worry about bond yields and freak out over potential inflation, and as Bitcoin breaks out into all-time highs. Well, with all of this in the forefront, you may be asking just what, Charlie, are the top 3 stocks for this week? Well, in this video, we must talk about what the top 3 stocks are for this week. But first, let's go ahead and do a quick recap of what happened last week. First, last week in our top 3 stocks video, we talked about BA as a recovery play. And look, folks, I know these aren't growth stocks, but they're very useful. It helps you diversify your plan of attack so that when growth stocks just start plummeting, you're not completely destroyed. But still, honestly, BA did everything that we could have hoped for. Up pretty damn fast last week, 223 to 270, very solid. PLTR started picking up a decent amount as well. This is a value play amongst growth stocks, a monster amongst monsters. Next recap I want to give you is DraftKings, the king of the drafts. So this was, of course, one of our plays that we reiterated quite a lot during the downtrend. Not only did we talk about this one in our videos back then, but I actually upgraded this mid-downtrend. As it was plummeting, I literally upgraded this to 105, which usually people don't upgrade things when they're plummeting. And likewise, now on the other side, we're at all-time highs again. And the fact that it's up at all-time highs while innovative growth sectors overall are still pretty below all-time highs, well, that's really saying something. But there's one more thing that I want to talk about before we get into it. It seems like we have a near guarantee of more bond spike scares this week, and especially in the upcoming months. Truth be told, eventually this yield scare should subside, and the Fed will be speaking on Tuesday and Wednesday, and my guess is they are going to reiterate what they said the last time. Yes, inflation is expected to pop up, but that it's still well below the benchmark, so they're not going to do anything about it. From the Fed's perspective, they're not worried about the fact that we're going to get back to 2019 levels, which is well below their benchmark, but from the investor perspective, they're saying, wait a second, 2019 levels? What if it shoots up to 2018 levels? What if it goes 3-4 times up? What if we have record interest rates? What if it goes to 2% and then 3% and then 50% interest rates? That's terrible. I think we could see some spikes well above 2019 levels. But overall, what the Fed is saying is that it's going to stable out, and they're going to be updating us on Tuesday and Wednesday. But anyways, before we get into it, the only thing that I ask of you in return for this video is that you hit that ravishing like button, and also don't forget to subscribe. Also, quick plug, this video is sponsored by ZipTrader U. If you find yourself dabbling in the stock market, you're a little Debbie dabbler, well, maybe dedicating yourself to a clear structure would be useful for you. As a member of ZipTrader U, you'll get lifetime access to our 8+ hours of step-by-step lessons, daily morning briefings on what the market is doing each morning, and of course, my list of price targets on our plays with updates and whatnot. You'll be able to see every time I upgrade or downgrade a stock in real time. So anyways, folks, if you see this as value, I'll go ahead and put the link to ZipTrader U below. I will be here with my cat lady mug for whenever you're ready, but this cat lady mug isn't mine. Don't forget that. Okay, first 2 plays that I want to talk about, I'm going to talk about together, and those are Riot and Mara. For context, of course, we started talking about my bullish sentiment for these stocks back on January 3rd, and I've gone back and forth on them, but on average, I haven't personally had one that I liked that much better than the other. On one hand, Mara is a lot dirtier and a lot teasier. She did a share offering, she's bet a lot on herself, which means she's going to do very well if crypto goes up a lot, but very bad for a while if crypto goes down a lot. On the other hand, Riot has a very strongly built infrastructure, and they haven't hit us with a random share offering either. But the truth is that both Mara and Riot are both the leaders in crypto mining. And I think it's best to diversify your bet on crypto miners. It's better if you bet on both instead of just one. That way you're spreading out the risk of the sector a little bit. Keep in mind that Bitcoin broke into new highs this weekend. And remember, crypto miners like Mara and Riot will make more profit as Bitcoin gets more expensive. And both are within a medium-sized spitting distance of all-time highs as of close on Friday. So if Bitcoin can manage to average above 60 this week or trend even higher, we'd likely see Mara and Riot break out a decent chunk. One thing that I've been saying since the beginning of this year is that the reason that I love crypto miners and the reason that I love Bitcoin is specifically because you're seeing a very clear trend of institutions going and snapping up Bitcoin or offering products for Bitcoin. And the more institutions adopt Bitcoin, the more resilient it becomes, and the more resilient it becomes, the more institutions adopt Bitcoin. So it's kind of a self-fulfilling prophecy circle. Think about it, if you're an individual that's considering panic selling during a Bitcoin drop, and then you think, hey, wait a second, well, Goldman Sachs, JP Morgan, and Tesla, and a ton of other prominent companies that I believe in are also weathering the storm with me, then you're much less likely to panic sell. much more likely to buy the dip, and that creates a lot more resiliency, and that creates a lot more institutions also buying the dip because everybody else around them has bought the dip. Goldman Sachs just said their client demand for Bitcoin is rising dramatically. JP Morgan sent out an educational deck to their private wealth, high net worth clients that said that Bitcoin can be a good portfolio diversifier if sized correctly. A lot of people are going to look at this and say, hey, if JP Morgan and Goldman Sachs are recommending this to their clients, they're selling products like this to their clients, well, that adds a decent amount of legitimacy. JP Morgan, a bank with great reputation, thinks that it's worth recommending Bitcoin at record highs to high net worth clients as a part of their portfolios. If what the bear said was true, and this is going to drop 99% in the next couple of months because Bitcoin's a huge bubble, well, imagine how stupid JP Morgan would look. I'm not saying that can't happen, but I'm just saying that JP Morgan thinks that it's worth the risk of that happening and that hurting their reputation because they see so much potential in this asset class. So something to think about. Even if you don't agree with them, you have to agree with the legitimacy that that brings to the currency. And at the end of the day, everything is just worth what people are willing to pay for it. Nonetheless, my personal projection is that Bitcoin will continue to rally throughout 2021. So with that being said, crypto miners that actually mine for this Bitcoin like Mara and Riot are good plays. If you're diligent, get them at a dip. I think that we're going to see a dip this week. I think you give this a couple days, Bitcoin's going to dip. You can get your position. You don't have to be impatient and just buy it at all-time highs. You can also take a position in straight up Bitcoin. I do have money in Bitcoin myself, and it is something that I believe in. Okay, next, I want to remind you of A1. I made a whole video talking about A1 and my whole breakdown of why I like it on Friday's video. I'll put a link below, but watch it before Monday so that you get a complete overview of this play because I'm very, very excited about A1. Okay, folks, now for the requested ticker of the day. So many of you have asked me about my thoughts on the short seller report on Lordstown Motors for ticker symbol RIDE. Now, to be honest with you, when I first saw Hindenburg attack Ride, I was a little bit surprised. Generally speaking, it makes more sense for short sellers to attack companies when they are in the momentum stage way up here because then they have more immediate downside. But when they are already hovering around lows, you don't have nearly as much downside. When Hindenburg, for example, hit Nikola, back here, it lost nearly half of its value, whereas when it hit Ride, it only lost like 20%. Ride was a less freaky report, but still, very clear difference in the beatdown. It's also worth mentioning that I did agree with Hindenburg's report on Nikola back when they reported it, but I have been critical of their other reports, such as with Clove, such as with Mara and Riot. In my opinion, and this is just my opinion, a lot of people don't even like my opinion, but in my opinion, a lot of the time, a short seller just has to simply find a stock that a lot of retail traders have bought, and then reiterate the fact that it's an early stage company in mean words, and then everybody panics. When in fact, if you bought it without knowing that it was an early stage company, and without knowing that there's a lot of risk with early stage companies, then you already messed up. But it's a perfect combination for the short seller because they can put that report out, the stock immediately jumps down, probably takes a couple months for it to go back up. By the time that happens, the short seller takes a ton of money, all the retail traders sold out in a panic and got screwed, and then it can go back up again and then the process restarts. But anyways, Lordstown is one that I've been reporting on for quite a while, and I gave it a very deep look. The biggest hit seemed to be Lordstown's order book. One of the big factors that made many of us bullish on Lordstown is that they had a lot of proof of concept in terms of pre-orders. Now with pre-orders, you can expect a certain percentage of pre-orders to not actually go through. People drop out, people no longer want the purchase, people purchase something else because there was a delay. But generally speaking, a decent amount of pre-orders means that you have a decent amount of demand. Hindenburg tries to break down the pre-order structure by saying that it was mostly falsified. They rely a lot on the fact that these pre-orders are non-binding instead of clear evidence that they were falsified. If Lordstown figured out a way to manipulate people into signing non-binding agreements and that people weren't seriously considering buying the trucks, well, obviously that's a huge problem. But on the other hand, if Lordstown thought that they were seriously going to be buying the trucks and they signed agreements of intent with Lordstown, then that's not really Lordstown's fault. The main issue they have is that you don't have to put a reservation payment, just a letter of intent. And they use that as a sharp dagger to speculate that all of Lordstown's orders may be fake. Where have we seen that before? Is that just with Lordstown? Well, no, it's actually also with Tesla. If you want a Tesla Cybertruck, I mean, yes, you have to give $100, but for a $40,000 truck, it's hard to see $100 as binding. The $100 is also fully refundable. You can also pre-order a Lucid Air Pure for $300. I mean, yes, $300 is more than the $0 that they asked for with the Lordstown, but still kind of hard to call that binding enough. Rivian, non-binding as well, no obligation at all to buy. Well, Workhorse also has non-binding letters of intent. And yeah, Workhorse hasn't been doing so hot either recently. But the point is, it's not like this non-binding practice is anything that investors didn't know before. We all knew this. There was always the risk that some of the pre-orders would drop off. And they used some loosely put together interviews with different people who signed non-binding contracts. For example, a sketchy 1,000 truck order from so-called promoters, a 500 truck order from Clean Fuels, Ohio, which has some sketchiness to it. There's also some other alleged claims of truck orders not being serious, but Hindenburg basically picks off some of the people that signed non-binding agreements, which based on my reading represent about maybe 1 to 5% of Lordstown's total orders. They use a few thousand orders to say, well, if these few thousand orders are not serious, that means that all 100,000 of the orders of Lordstown Motors must not be serious. And I think that is a tough claim to make. If Hindenburg was able to get a few clients to say that they weren't seriously interested in Lordstown's pre-orders, that doesn't really mean anything because we already know that pre-orders can drop off. But Lordstown should be able to get proof that there actually is intent from the rest of their clients. If they can get enough clients saying that they're actually serious, they could actually refute this. And again, they have over 100,000 pre-orders, at least that's what they reported. So again, I'm going to be watching very closely their response because I wasn't there when they were signing these non-binding letters of intent. I can't say conclusively whether or not these were fake or not. But still, this report does not provide proof that 100,000 pre-orders were fake. They also go on to name a former employee who's unnamed, who then adds a lot of other criticism to Lordstown Motors, like they're going to have production delays, they're greatly exaggerating all their claims, blah, 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 blah. Again, unnamed employee. One unnamed former employee is making all of these claims against the company. And that's another huge basis of this whole argument. So anyways, that's my take on it. Let's see how Lordstown responds and we'll keep you updated. Anyways, folks, if you have any ticker that you'd like me to discuss in the next video, go ahead and comment below. If you'd like to learn how to trade, would like access to our private chat and daily morning briefings, we'll go ahead and check out ZipTrader U in the comment section below or in the description below. I have a link if you'd like 2 free stocks and you're wondering what broker to trade these stocks on. Well, Webull is a fantastic broker and I'll put a link to them below. And as always, have a great day and I'll see you in the next video.